June, August, and December, these are the worst months to trade, mainly because institutions and professional traders, they are just on vacation, right? So there's going to be a lack of volatility and liquidity is going to be quite low in the markets right now. So it's going to chop around a little bit. So we'll try to see some opportunities, right? But if not, that's the main reason. Okay, so first of all, let's look at EURUSD, right? So we pretty much identified like this 4-hour swing range a while back. And I don't think that the swing range has changed whatsoever, right? Price is still within this swing low and swing high right here. So nothing has changed. The only thing that has changed is the internal structure, right? So you can see the internal structure pretty much shifted bullish recently when price actually went up there and took out this last lower high that we have right here, which tells us that, you know, this internal pullback is over and right now we are potentially shifting bullish, and then we can expect price to take out this weak high that we have up here. Otherwise, it's the opposite. This should be a weak high. This should be a strong low. Let me just change that real quick. This is the 4-hour strong. This is 4-hour weak. Right, so yeah, that's pretty much our expectation on what price is going to do here. We're just going to expect the internal to remain bullish, right, to facilitate the continuation of the higher time frame order flow until price actually take out this high here. And then once that happens, we got a break of structures to the upside. And then we know for a fact that at any point of time right now, price can start shifting bearish to actually start pulling back. Okay, so yeah, that's pretty much like the long-term bias wise, right? So if we do our top-down analysis, you will see that price has just pretty much mitigated this demand zone that we have right here at the extreme low, and that explains why the pullback has ended, and bullish and demand has actually overpowered supply, right? So based on this right now, if you look at the lower time frame, the 1 hour, the 15-minute structure, you will see clear as day price is creating structural highs and lows, right? Just higher highs and higher lows right here. Okay, so follow the money. So if you look at this right here, let's just try to map out our range. Okay, there we go. Let me just get rid of all of this and just map it all out against, right? So this is the market shift, and then obviously we got like a break of structure to the upside right here, and then we got another break of structure to the upside right here. Okay, so yeah, so you can see this was that last low. But then since price has actually taken out this high right here, this is the lowest low that led to the most recent break of structure. So we can mark that up. And then this would be your 1 hour swing high, right? So you can see this is your 1 hour swing range that you want to be trading within. 1 hour swing high, 1 hour swing low right there, as simple as that. Okay, so we know that everything in between will be counted as your internal structure, right? So if this is your 1 hour swing low and this is your 1 hour swing high, everything in between will be your 1 hour internal structure, right? So all of this right here, price creating this right here is just 1 hour internal structure. And if you look at the 1 hour internal structure, what happened was that price has actually shifted bearish when price actually took out this low right here. And then it created like a bunch of equal highs right here before coming down even further. Okay, so that's that. So if I go down to the 50-minute time frame, right, I can pretty much identify that this is my 50-minute swing high. Okay, and then this is my 50-minute swing low, swing high, and this is my 50-minute swing low, which is pretty much exactly the same thing as we have identified on the 1 hour structure. And then everything in between, like I said, just an internal structure going on right here. So this was that last internal break of structure, and we know that this will be our market shift, where price actually came down, take out this low right here, giving us a market shift, which means the internal structure has shifted bearish to once again facilitate the 4-hour swing pullback. Right, so over here, 4-hour structure bullish, internal structure shifted bearish to facilitate the pullback, potentially creating like a new higher low right here before we continue pushing to the upside, right? And it looks something like this. Okay, so right now, the best thing that you can do at this point of time is to wait for your market shift to happen, for you to confirm that the pullback is over, internal shifting bullish, and then this is where you can catch all those high probability setups right here. Right, because this is when internal is aligned with the higher time frame order flow. Okay, so in this particular scenario right here, I don't really like this situation right now where it's like kind of choppy, not really going anywhere, right? There's no clear bias. But if I just zoom in here a little bit, let's just look at what we have, right? We've got a market shift. And if price take out this low, then we got an internal break of structure, but that did not happen whatsoever, right? So if I have to use my highlighter, high, low, high, but this one did not break structural, right? So this is not really considered as like a valid high. Okay, so based on this is pretty much like the range the 15-minute internal range that we are trading within right now. Yeah, you can see this is really not the ideal price action, right? Price just shopping around, not really going anywhere. There's still a chance that price could go down even lower as well, grab more liquidity, perhaps below this low here before pushing to the upside. And then there is also a chance that, this is it. Price has swept enough liquidity from here, and you usually tapped into like this extreme demand zone right now, and then we can potentially shift bullish, and we can just continue with the higher time frame order flow as well, right? So the bias over here is not really clear, right? But short term wise, you can probably expect price to just goes up probably to at least this supply that we have up here. The main reason is because we have indeed grabbed some liquidity below these lows right here, right? Below this low trend line right here. Okay, so in this particular case right here, let me just erase all of that. We did got price coming down there, sweep all this little liquidity here, and then you also tap into this little demand that we have up here, and that explains why price is surging right now. And also, if you actually look closely, guess what? We got some equal lows right here as well, right? Nice little equal lows. Then price comes down, sweep those lows, and then now it's pushing up. So if I were to enter for a buy right here, I'm gonna be targeting like this supply that we have right here, right? Because this is a supply that swept liquidity, right? So this will probably be like a very quick trade. And if price is able to take out this high, then we can potentially target like this high right here. Okay, this would be like the next point of interest that price is most likely going to mitigate before pushing down even further. And if you look at this, we got a supply chain going on right here as well. Nice little supply chain, boom, mitigate this previous supply, and then what do we have? We got price coming down even further. Yeah, you can see this one is quite fresh and it has been unmitigated whatsoever. And then this is probably the first point of resistance that price will need to conquer, or rather overcome. And if price can overcome this resistance or this supply zone right here, price can potentially come up to this next supply. Okay, but right now, the thing about doing that is that you must understand that the internal order flow is still bearish, right? If you look at the internal order flow right now, it's technically still heavily bearish. Okay, this is the last lower high, right? So if we are following this internal order flow, we can expect price to just mitigate this supply and then just continue crashing down even further, right? So I wouldn't say this is the most highest probability setup, mainly because you are trading against the internal order flow, and then also because of the fact that we are still stuck within this range right here. There is no clear bias, right? So yeah, that's that. Like I said, it could work out, right? You can enter for a buy right here and target this area right here, and you could smash your TP, but just know that this wouldn't be considered as a high probability setup to me, right? I'll probably deem this as a medium or even like on the lower side of the medium probability setup, right? So yeah, that's me personally. What I do want to see though is for price actually come down to this extreme point of interest that we have down here. This little demand, 15-minute demand actually. Come down here, right? Here's what I want to see, okay? Price comes down here, boom, 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 boom. And then maybe we got like a fake market shift right here where we got price actually take out this high right here. And then later on, guess what? Available liquidity being built up below these lows. Not only below these lows, but also there's some below these lows here as well. Okay, so yeah, so later on we got a fractal market shift. We got price coming down here, liquidating this strong low, and then it also tapped into our extreme point of interest, right? This is also a very strong point of interest, mainly because of the fact that it swept a lot of liquidity below this low right here as well. And then this is also our last line of defense, and then this is where I can get my sniper entry. I'll just try to look for some good old snipes from here, enter for a buy here, and then this is when you can potentially even target like this area right here if this is still unmitigated by then, right? If price have not created like a lower high by then, if there's like a lower high, then you can potentially target that for like short-term profits. And then if you want to be even more ambitious, you can try to target like this wick high, because we know for a fact that if price is able to react from this demand zone here, there's a very high chance that this is it, the pullback is over, and right now price is just gonna create like a new higher low right here and then just pushing to the upside. Right, so yeah, that's pretty much big picture thinking, right? You just gotta really be patient and wait for those type of setups, right? Obviously, like I said, a lot of things can happen into the market right now. Price can, I don't know, like come down here, even take out this low right here, sweep more liquidity before pushing to the upside as well, right? But for me personally, I just want to make sure that I preserve my capital for the setups which I deem as high probability, right? So that I have the highest chance of success. Okay, so that's pretty much it for EURUSD. Like I said, not much expectation of price right now. Yeah, we'll see whether like this scenario actually happen. If it does, perfect, and then we can try to look for the setup. Main thing is, I just want to wait for price to mitigate this extreme point of interest here, and I get my entry model before I actually enter for the trade. Or I can even get my entry model somewhere around here once price is going to take out this high right here, right? Yeah, but right now it's just not it, man. Yep, that's pretty much for Euro USD. Let me just go down to the lower time frame and check my blind spots. Price comes down here, nice, very sharp V-shaped reaction. You can see this is clear as day liquidity sweep, right? But the thing is, you must ask yourself whether there is sufficient demand to overpower the supply that we have right here. Because you must understand, like I mentioned earlier, the internal order flow, it's still heavily bearish. Okay, so even though we can have a liquidity sweep right here, but this does not mean that it's gonna lead to a market shift. It could just mean that smart money is using the available liquidity below these lows to facilitate this pullback right here. And then once again, price can just come in here, and then back to sellers gonna come back into the market and try to overhaul power demand, and then boom, next thing you know, price comes down there, and then potentially we get a final liquidity sweep or even a few more liquidity sweeps before the real move actually happens to the upside. And look, for people who don't really understand what I just mentioned, because you're new to the 1% club, don't worry, right? As time passes, you start to deepen your understanding of how the market actually works. You start to gain a deeper understanding of liquidity, structural, order flow. Everything will make sense, right? Like what I always say, it's like putting different pieces of the puzzle together. And eventually, if you can do that, you will have a very beautiful masterpiece. Okay, so let's move on to the next pair right here on GBP USD. What is this? Did I even take this trade? Nah. Oh, okay. Yeah, I wanted to enter for a buy right here when price actually mitigate this zone right here. But I didn't. Okay, I'm glad I didn't. God damn it, imagine if I enter for a buy right here. You see, this is why you always gotta wait for extra confirmation, man. If you don't wait for extra confirmation, you try to enter for a buy right here because you see the market shift and you see price sweep liquidity. Next thing you know, boom, price comes down, sweep more liquidity before the real move happens. Or even leads to like a shift in order flow as well, right? Okay. Where did I even place this? I placed this yesterday? Oh shit, I placed this yesterday. Nice. Nice, nice. That's 10k avoided. 10k loss avoided. Okay, cool. Let's go on to GEO, right? GEO is an interesting one, man. GEO is an interesting one. Let's take a look at this. So we got a breakout structure to the upside right here. I mapped out all the internal breakout structure you can see right here. And then what we have is we got a little market shift right here. The price comes down here. Take out this high right here. You can see internal shifted bearish. Okay. Internal order flow shifted bearish. Let me just mock up the... Yo, why did I keep on putting this as the strong structure, bro? I'm tripping. Okay, let me just put that in properly. There we go. Okay, so for our swing range, internal structure shifted bearish. As you can see, we got a market shift right here. And I think this is a very clear case where the internal is bearish. Like, just look at the amount of imbalance that we have to the downside right here. So based on this itself, we know for a fact that after the market shift, price is potentially going to pull back, right? So where is price most likely going to pull back to, right? This is where you can start mapping out your point of interest and just follow the money, okay? So there's a supply right here. And then there is also another supply that we have up here as well. And you can see what happened right here. We got a failed reaction right here. And then after we got a failed reaction, price actually went up there. God damn it. Price actually went up there, swept the liquidity from this high itself here before pushing to the downside. Okay, so based on this alone, we know that this is an institutional zone. And you can see what happened. Price collapsed after it swept liquidity, sharp V-shaped reaction. And then later on, price went up there, mitigate this previous supply, and then push to the downside. And then you can see it's just like a chain reaction right here. Mitigate this next supply, push to the downside. This one is unmitigated. No, actually, no, this one is mitigated as well. You can see. Boom, price mitigate that. And then boom. This is the most recent order block, right? This is the most recent institutional zone. Okay, so you can see, clear as day. What do we have? A large amount of imbalance that we have right here. which means this zone is gonna act as a magnet to attract price up here. Right, price is gonna gravitate towards that area before we can potentially shift to the downside, right? Or we can even get price pulling back deeper, sweep the liquidity above this high right here before we push down to the downside as well. All right, so that's pretty much another scenario which can happen in the market itself. Okay, so yeah, that's that. And let me see what we have right here. Yeah, so like I said, internal is bearish right now. And you can see price is potentially going to start pulling back because of the fact that if you look at the left hand side, we had just come off like a extreme demand zone that led to a break of structural, right? So we know for a fact that there is going to be demand at this point of interest. So we can expect the lower time frame, the 15-minute structural, to start pulling back, okay? Potentially pulling back right here. And then boom, this is where I can look for that snipes to like short it all the way down again. But now, if you want to trade counter trend, right, you can as well, right? You can try to enter for a buy right here. The best time to do it would be when you actually mitigate this point of interest right here, and then you can just try to target this high right here as well, right? If you are like scalping and shit. Okay, so that's that. And if you want really like the highest odds of success, then you can try to look for shorts at this area. Let me just draw the premium discount too, just to be sure. Okay, you can see price is within that discount pricing right now, so you need to be a little bit cautious when it comes to looking for shorts, because at any point of time right now, this pullback could be over and we could just print like a higher low right here, and then price can just go up even further. Yeah, so actually this, you got to be cautious if you actually look for sells right here. My best advice would to just observe, right? Observe what price does at this supply zone right here. If price comes up there and you find your entry model, great, right? But if not, if you observe the price and you can see there's a lot of demand at this area here, price is just seemingly blasting right through these areas right here, then yeah, it might not be a good idea to actually look for shorts here, because this could just mean that the pullback is over, and right now we can potentially take out this weak high here as well, right? So observe what price is doing, and then you can go from there. Let me see, 4-hour structure. Yeah, you can see it's heavily bullish on like the higher time frame as well. Let me just map this up. Look at this, the extreme zone here, and then price is just mitigate this zone here. This one failed right here, came down here. Yeah, yep, this would be a pretty good place to enter for longs actually. Yeah, this would be a pretty good place to enter for longs. Let's see where they got a market shift on the lower time frame. Yeah, you can see this is one of those scenarios where there is no market shift whatsoever, right? Which means price is most likely just gonna like mitigate off like this near zone and then just push to the downside, or even like this near zone right here, like this area right here. Yeah, so based on that, that's pretty much my bias right now. Like I said, if you want to enter for longs right here, you can, right? You can, and then you will just be targeting like this next opposing supply that we have up here. This would be a pretty decent risk to reward as well. Not the best, but obviously you can probably refine your entries even further on like the lower time frame itself. Yeah, you can see right now, very high chance price just gonna come up here. Okay, so that's that. Let me see what else I need to cover over here. We got price coming up here, mitigating this zone here. Yep. Just checking my blind spots once again. Did I miss out anything? Yep, we did got price potentially sweeping this liquidity right here as well. That was in the details. And later on price comes down there, sweep that low, and then push it to the upside. Yeah, if you enter for buy right here, this will be your aggressive entry model. Okay, this will be your aggressive entry model. Yep, this will be your aggressive entry model. Okay, so that's pretty much it for GU, right? So let me know what you guys think about GU down in the chat right now, and I'll just quickly look at the questions that we have right here. Looking for buys from extreme. Hey Brett, I have a question. I think you are marking the wrong 4-hour swing high and low, as the break of structure should be a body close up candle. Good question, Sam. So in this case right here, right, I will actually deem this as a valid break of structure, because what happens is that this candle right here, you can see this cheeky little inside bar candle, it actually did close above that high right here. So to me, this is considered as like a valid break of structure. What would not be considered as a valid break of structure is if the candlestick wick up here, but then the body closed like below here. Okay, if the candlestick body closed below here and just like a wick break just like this wouldn't be a valid break of structure to me. But because of the fact that this one here, the candlestick body closed above the high, this bullish candle right here, and then the next inside bar candle also closed above it, this signaled to me that there was sufficient demand that led to a break of structure to the upside. So this is indeed a valid break of structure. Yes, 1 hour time frame candle close. This is all I need to validate the break of structure. Ideally, it should close on a 4 hour, right? Ideally, but if I get like a 1 hour break of 1 hour candlestick close just like this, I'll take it. If we mark the premium discount on 4 hour, is the price got more space to go bearish? Is it some chance? If we mark the premium discount on 4 hour, is the price got more space to go bearish? Is it some chance? Let me try to analyze your question right there. So in this case right here, remember, as long as price gets below this equilibrium level, it could just shift bullish at any point of time right now. It doesn't have to come all the way down here, right? It doesn't have to. Any point of time right now is considered as cheap in smart money's eyes, right? Because this, after all, is the discount zone, right? So price can mitigate this demand zone, push up. You can even mitigate this demand zone right here and push up. But in this particular scenario, that did not happen, right? Price just blast right through that point of interest, maybe grab more liquidity below this low before pushing to the upside. I mean, mark today strong. Okay. If you mean marking the premium and discount on the daily structure, then yes, it could. Okay, if we look at this right here, right? If you're referring to this entire range right here, then yes, there's more room for downside as well. Let's mark that up. Yep. If you do look at it, you can see there's actually more room for downside. But if you are looking at a 4-hour structure, then there isn't. So it depends on how you perceive the markets, right? So if you're like a swing trader, this is probably what you will do. If you're like a day trader, this is probably what you will do. Just mark it at like the 4-hour structure. Okay, so let's look at the next currency pair. Let's look at GBP JPY. So if I'm looking at GJ right here, we got this is the last break of structure to the upside. Price came down here. Swept some liquidity below this low. Didn't lead to a break of structure right here. This is not considered as a break of structure here. Yeah, this is not considered as a break of structure. So we are still within this 4-hour range right here. And you can see price has actually went up there. Created like an inducement right here. Swept the available liquidity above this high. Above these equal highs. Even above this high here as well. And then we got a huge push to the downside right here. Okay. And see, this is clear as day. Good old manipulation right there. Clear as day, good old manipulation. Let me just get rid of that. Let me just bring that in. Boom. Mark that up. Okay, and then what do we have? We got a low market shift right here. And then right now, price is just pulling back to this last swing low, internal low that we have up here as well. Okay, we got price mitigating this here. And then price also did sweep some liquidity below these lows here as well. Before we push to the upside. Nice. Right, so you can see. Nice little liquidity sweep right here. Looking quite classic. Price comes down, sweep liquidity. I believe it tapped into this extreme point of interest as well, right? Tap into the extreme point of interest. And then we push it to the upside, right? Same thing with GU. If you enter for longs right here, it's also the aggressive entry model as well, right? Very aggressive entry model. Same thing, can easily just target like this point of interest that we have right here. And then we'll go from there. Yeah, but other than that, man, I think, yeah. because of the fact that like price is still within this range right here, I don't really have like a long-term bias on what price will do. Like price can potentially do this, right? Like sweep the liquidity from the left-hand side and then start pushing up, mitigate this supply here, and just continue bearish, right? And then it led to like an internal break of structure. And then it goes back into this little range right here that we have over here. And then it could just be stuck in this range as well. Yeah, but the thing about GJ is that because of the fact that it moved up so fast and it moved down so fast as well, you just want to make sure that you are capitalizing the short-term move, right? So I'm talking about this. Right? So the thing about GJ is that it consolidates like a lot of time, or just in general Japanese yen pairs. But when price is moving in one direction, you want to ride that direction, right? Like you want to ride the hell out of that direction. So if this case right here, if what I just marked up proved to be true, right, which means price comes up there, mitigate this supply, comes down, led to a break of structure right here, I'm going to be looking for shorts all the way here and just like try to ride this trend direction until the market proved to me that this is no longer working out and price is shifting bullish again, then I'll just ride that direction, right? So that's the thing about GJ. That's honestly my best tip, guys. Like, don't try to even fucking swing trade GJ, man. Like, GJ, UJ, I would say like it's not even really good for swing trading as well. GJ definitely just not ideal for swing trading. If you're able to catch like this move right here as your swing trade, then good for you. But right now, it's not the best time to look for swing trades. Yeah, unless like I said, we got that short-term change in direction and we can get price shifting bearish at least for like a few days or so. Then you can look to hold your trade. Then yeah, if not GJ, just best for short-term pleasure. I mean short-term move. Yeah, short-term pleasure. Yeah, man. So that's pretty much GJ. Yeah, GJ. Like I said, no long-term bias. Short-term bias just fairly straightforward. I don't think there's anything else price can do right here. Let me see. Let's see whether we got any supply right here. Yeah, right here. Or even price can come out here as well. Cheeky little supply right here. And then push down even lower as well. And then this would be like a failed reaction, right? So you can see this is where supply will overpower this demand, right? We got a failed reaction. And then nice, you can potentially wait for price to pull back to either one of these zones that we have up here that is ideally fresh and unmitigated. And then you can look to continue to play like this short-term direction right here. Yeah, but like I said, guys, whatever we teach here, it works for all asset classes, whether that's forex, stocks, crypto, indices, commodities, or whatever little niche corner that you like to gamble in, it works in for everything. Okay, so let's look at gold next. Oh, gold. Man, gold is sweet, bro. Gold is sweet. Okay, let's look at this. Okay, price goes up, pulls back. Now this is the most recent 15-minute structural low, structural high, right there. Bam, define our 15-minute swing structure right there. Go down to the lower time frame. What do we have? Right, we got price coming down to mitigate this point of interest right here. Let me see. Nice, we did got a market shift right here. A little fractal market shift here. And then this becomes the demand zone that led to the fractal market shift. And we know that it's going to be available liquidity below this low here as well. Below this strong low right here. Fractal market shift. This is a fractal break of structure right here. Now this is actually an internal break of structure. Let's see this. Yeah, this is a nice little internal break of structure right there. Price came down, swept the lows that we have below this low here, and then pushed to the upside. Nice, cheeky little upside right here. we haven't gotten a breakout structure yet. What we did have was price actually mitigating this supply that we have up here. Now it's potentially pushing to the downside. Let's look at this. Okay. Remember, we are trying to ride this move right here. Even like the higher time frame is not like a super duper clear bias, right? Because of the fact that if you look at the higher time frame, it's technically still in somewhat of like a consolidation. But if you slowly map it out, you could just see that, you know, we did got a market shift right here. That means the internal structure on the higher time frame itself is bullish at least, right? And then we got another breakout structure to the upside just like this. And then right now price can potentially pull back to these areas of demand that we have down here. And then we are looking to long here to trade this move right here, right? That's really your objective as a professional trader right now at the moment. Okay, is to try to catch this higher low right here. But the question is whether this is indeed a valid higher low, or is price gonna come down and sweep more liquidity before the new higher low is formed, right? So that's what we need to be clear about. Okay, so in this particular case itself, if you look at this, we got price pushing up, comes down, goes up, right? So we know that this is the extreme point of interest, and then this is the near point of interest. And if you look at this, price did mitigate the extreme point of interest, right? So at some point of time, it did use up some buyer orders within the extreme point of interest itself. Okay, and then this becomes the unmitigated point of interest, which now price is officially mitigated. So now, once again, ask yourself whether there is enough demand at this area here to cause price to go up right now. And looking at where price is at right now, it just doesn't seem to be the case, right? Like, I'm just not convinced that the pullback is over. I feel like price is just gonna go down even further. Mainly because if you look at this right here, we got a huge amount of supply here. And this fractal market shift could just be used to facilitate that pullback into that last 1 hour internal bearish order flow right here. And then before it continue bearish. Okay, then this could just be like a new internal lower high being formed right here. So yeah, I'm not too convinced that the pullback is over and price is gonna do this. But like I said, anything can happen, right? Later on, New York session, if price goes up there and break this low right here, this high right here, bear in mind that it could still mean that price is just pulling back to this last 1 hour internal supply range right here to create like a new lower high before pushing to the downside as well, right? Yeah, like I said, anything can happen. Okay, so in this particular scenario itself, you can see price did use the liquidity below this low right here to facilitate this short-term bullish move right here. And if you go down to the 50-minute structure, yep. Actually, you know what? I might see this wrong. This is not a this could be a liquidity sweep, or it could be a market shift as well. Right? If you look at this, you can see it's all about the way you perceive the market, right? What we have right here, fractal structure, okay, fractal structure, cool. And price came down here, take out that last low right here. Right now, price could potentially shift bearish. And then price can come up here, mitigate this supply, and then come down here, which signal to us that this short-term pullback is over, and we indeed has already we indeed already fulfilled the objective of pulling back to some form of imbalance that we have right here. And then right now we can potentially shift bearish again. Right, so like I say, it's all about how you view the market. And as much as possible, we want to ensure that our perception of the market aligns with the reality of the market, the objective truth of the market. That's all we are trying to do as traders. And the thing is, it's so difficult to get that right? Because you have all these like subconscious forces that is just holding you back, and it's just trying to like push you to see what you want to see on the market rather than what actually is happening in the market itself, right? So yeah, just by doing that alone, man, like honestly, this could be a market shift, but the thing is, it could also be like a liquidity sweep for price to actually pull back up here, or it could be both even, right? You can see this is indeed a market shift, but at the same time, smart money, they did use the liquidity below this equal lows here, or even below this low right here, to fuel price to actually push back, to actually pull back up here, right? So it could be both as well, right? So that's the thing. So right now, at the moment, honestly, if I want a much more clearer bias, two things must happen, or rather, one of two things must happen. Either price must come up there and take out this high to confirm to me that indeed price is bullish, and in that case, we can potentially look to play like this bullish move right here, right, and try to long it all the way up here, at least into these areas of supply. Or price must come down there and take out this low right here to convince to me that this is indeed a valid market shift, and right now the internal could potentially continue bearish, right, so that it's aligned with the 1 hour order flow that we have right here, and then we can potentially go into deeper areas of demand within the discount pricing itself, right? So that could be the case as well, right? So like I said, to get a much more clearer bias, ideally I want to see one of those two scenarios play out in the market. Okay, so yeah, those are the one or two scenarios that I can think of that can really allow me to get like a much more clearer understanding of what's actually going on in the market itself. Or like I said, price could just like consolidate right here, right? Why? Because it's bloody June, all right? So that's pretty much it for gold. Like I said right here, end of the day, man, like what I mentioned just now, sometimes you see the market as what it is, but majority of the time, you see the market in terms of what you think you want it to do, right? So that's that. Let me just go through some questions right here. Was the 15-minute high not taken out on 15-minute time frame? 15-minute high. What do you mean 15-minute high? Let me just take a look at this. 15-minute high. Let's take a look. This one right here, yeah. It is indeed taken out, actually. It is indeed taken out. So in that case, this will be our 15-minute high right here. Can you zoom out on the daily time frame? I had entered into a buy. End of the day, man, like if you're entering for a buy like somewhere right around here or like over here even, right? Like I said, it's very difficult to tell whether it's actually gonna play to fruition, mainly because of the fact that we are chopping around this area right here. So it's very hard for me to know that price is going to come up here. So where will you place your swing low? It's still here. There is no change to the swing low whatsoever. Let me just see. Okay, if this is the break of structure right here, let me see. If this is the most recent break of structure here, right, then your internal low will be like right here. This will be your internal low right here. Then this will be your market shift. No, actually no, Reese, you confuse me, right? How I define swing structural versus internal structural is how you define it. For me personally, I define this as counted as one internal break of structural. So everything in between is counted as my internal break of structural. It's the second layer of internal structural, which I don't give a shit about. So in this particular case itself, right, this would be the internal high, this would be the internal low, right? And then whatever that's in between right here is just like internal structural, which just doesn't count to me, right? I would even count this as like a fractal break of structure rather than like a valid internal break of structure. Like I said, how you see structure is subjective. How you define structure doesn't need to be exactly the same way as how I do it, right? But at the end of the day, man, if you follow like the same mechanical rules that we provide you, we are going to come to the same conclusion. For example, if I did define this as a valid internal break of structure, guess what? I got a market shift. Cool. What does this mean? Internal shifted bearish. Exact same thing, right? That's how I see the market right here as well. We did got a market shift, internal structural, price did shift bearish. Okay, so like I said, don't get too anal or like too like lost in the sauce when it comes to the structural. Go and have your own rule, right? What counts as a swing structural? What counts as an internal structure as to you? Once you figure that out, then you will be able to figure out, okay, what indeed is valid, right? So that's the thing that a lot of traders get confused about, because like I said, guys, you don't need to follow how I map structure, right? For example, I mark this 4-hour swing high, swing low and swing high, but you might mark this right here as your 4-hour swing low and this is as your 4-hour swing high. End of the day, man, it doesn't matter, because end of the day, if you actually utilize the concepts that we provide you, you know how to identify liquidity, you know how to mark up your point of interest. Depending on the type of trader you are, whether you're a swing trader, scalper, or intraday trader, you are going to be able to figure out your bias, right? So that's pretty much my best advice for you. Yeah, so yeah, I personally, I would define this as more of like a fractal structure rather than like an internal structure. Okay, so that's pretty much it for Forex. I'm not sure whether I want to go on stocks. Should I go through stocks? Like, should I just quickly go through US30 or not? Just type in the chat, yes or no. Like, do you feel like that's a waste of time? Brett, remember what I said last coaching call about not looking at gold before mastering Forex? This was what I meant, because I can't figure out a bias at the moment, haha. EJ, it's not your fault. Genuinely, it's not your fault. Just because you can't figure out your bias on a particular currency pair doesn't mean that you suck at that currency pair itself. It just, sometimes you just can't figure out the bias because price is choppy. The market conditions are not ideal. Volatility is thin. Liquidity is low. In that case, instead of like thinking that you suck at trading, you just accept the fact that there is indeed no opportunities in the market, right? But yeah, if you really just feel uncomfortable with gold, you're not really familiar with the price action, like I said, you're much better off preserving your capital for what can actually make you money, and that will be Forex. At least master that first before you go on to gold, right? Yes, please, US30. Okay, US30. Yeah, let's just quickly go through US30 then. US30, man, like, bro, oh my god, man. Look at this shit, man. You can see there is still no, like, market shift. Okay, like, right now, it has been stuck in this consolidation for, like, 1 month, bro. Like, it's still not really clear whether price is going to go back to all-time highs or it's going to have the next leg to the downside, right? It's still not super duper clear to me, to be honest with you. Which is why right now, I'm still like thinking about whether to actually buy more stocks, because I don't know whether price is going to go down right now or price is going to shoot back to all-time high. And even if it shoot back to all-time high, the risk to reward is still not that great as well, right? So to me, if you're dollar cost averaging, right, like I said, by all means, go ahead. Timing doesn't matter. Time in the market matters more than timing the market. But if you are genuinely trying to get in at the best price point possible, right, that means as cheap as humanly possible, you might be much better off waiting for price to come down into like these areas right here. Yeah. So right now, looking at US30, you can see this one right here. We thought that it was a market shift, but no. Market just came back up here because the internal order flow is way too strong, right? Institutions are just buying right here. And yeah, you can see there is no clear market shift as well. Yeah, market is still filled with a little bit of uncertainty. No clear market shift right here. Lower time frame as well. This is not a market shift. So if you just map out like all the structure that we have right here, yeah, you can see it. Man, even stocks, guys, like even stocks, there is still no clear bias. Look at this. Let's say this is the most recent break of structure, and this is just like a fractal break of structure right here. Okay. And then we did got a market shift right here. Okay, let's say this is indeed a valid market shift, right? Once again, what must happen for this market shift to be valid? Price must take out this low here. If price doesn't take out this low here, then this could just be a liquidity sweep. But at the same time, we can't define that this is a liquidity sweep. Or whether, no, actually, we know that this is a liquidity sweep because we did got a V-shaped reaction right here. But it's only confirmed when price actually take out this high here. If price were to take out this high, led to another internal breakout structure to the upside, this is not valid, by the way, then we know that this is indeed valid liquidity sweep and price can potentially head up even higher. Right, but I can see right now, it's still within this range right here. I'm interested to see what price does during the New York session, whether there's going to be sufficient liquidity in the market for price to continue bullish and hopefully get back up to all-time highs. And then we can finally break out of this like bearish order flow right here. Yeah, but right now, it's that point of indecision where the bulls and bears, they are playing this tug of war. and everybody is standing their ground, right? Like, there is no clear winner. On the left hand side, you got the Aussies. On the right hand side, you got the UK big man things right there. It's like there's no clear winner, right? That's exactly what happens in US 30 right now. Yeah, but right now, man, it's really hard to say, guys. Like, there's just ton of uncertainty in the market right now, and you must understand that a lot of times the stock market and even the crypto market, they are heavily based on sentiment. It's not tariff that result in this crash right here. It's how the market reacts to the tariff. It's how the market reacts to Trump's tweets, how the market reacts to Elon's tweet that caused the crash in Tesla stock, right? So yeah, if you play at like the high levels, you will know that it's all about sentiment, and you will know that if you can engineer sentiment through publishing fake news, you can engineer the stock market crash, right? So heavily sentiment, I would say technical analysis is not even going to help much in this particular scenario right here, because first of all, we don't have like a clear bias. Second of all, fundamentals is just pointing to the fact that the market is with uncertainty right now. And like I said, the bulls and bears are playing like a tug of war. And yeah, like third of all, man, yeah, let's just watch what Trump says, all right? Let's just see how the tariff shit goes, okay? Once we figure out like a tariff, let me see if there's any updates on the tariff things. It's been very long since I look at what's wrong with tariff. US companies, okay, shit, that I think nothing happened. Tariff concerns ease, but yeah, it haven't been eliminated. There is no clear decision on tariff yet. Yeah, man. So it's most likely gonna like just be oscillating within this area here until the market finds certainty. If the market can find certainty, then yeah, potentially we can get that market shift and price can go back to all-time high. If it doesn't, and it continue just like just don't know what the fuck is going on with US and China, it's just gonna remain in this consolidation right here. Yeah, so this could drag out for weeks or even months, right? Like I said, once again, depending on the news that will come out very, very soon. Okay, so that's for US 30. I think it's the same for Bitcoin right now, right? To me, I believe that Bitcoin is the one that is leading all like the cryptocurrency, like all the fucking meme coins, altcoins, all that bullshit. It only follow Bitcoin move. It doesn't even follow like fucking XRP, right? XRP is just, I don't know. People say that it has value, but to me, it's like a meme coin. But they sell it as though it has indeed some form of value, like it's the next Bitcoin. But yeah, like Bitcoin is the one that is gonna determine how all the other freaking cryptocurrencies actually move. Okay, and once again, it moves based on sentiment, right? If institutions, if smart money, if whales, cabals decide to put a shit ton of money into Bitcoin, and then the masses start following, and we start getting this mass adoption of cryptocurrency, maybe it can replace money in the future, whatever, then Bitcoin could potentially go up to 1 million. Like, generally, it could go up to 1 million, right? So, once again, all about the sentiment. So, yeah, that's pretty much it for stocks and crypto. To me, I think stocks right now just, I don't know, man. It has been like stuck here for like so long, you know? Yeah, it's just been stuck, man. Yeah, but yeah, we'll just observe and see what price does, right? Whether price is able to break out this little range right here. I want to say that price can do it this week, but at the same time, man, I don't know, man. Like, you just never know for sure, right? Right, so that's that. John say, hey Brad, I'm new here. Could you please shortly explain which timeframes you are using for setting your swing highs and swing lows? So John, if you're new here, just go through the mechanical market structure lessons and you will know that we usually identify our swing highs and swing lows on the 4-hour time frame first, or even on the daily time frame, and then we will do it on the 15-minute time frame as well, or even the 1-hour time frame, right? So it depends on the type of trader you are. But yeah, as you progress through the lessons, you'll get a very deep understanding of like structure and all that stuff. Okay, so yeah, that's pretty much it, right, for today's live trading session. I usually don't speak much about crypto because I don't know a lot about crypto, like, to be honest, right? Right now, I do want to get into crypto. I know that it's gonna be revolutionary, right? I'm just trying to find like the perfect price point to enter, okay? But I honestly believe that crypto is just gonna like blow up within the next few years. Like, yeah, because of the fact that banks and all these payment processes is just unreliable nowadays, man. Yeah. So yeah, That's pretty much it, guys. Let me see. Reese, do you have any advice for me as I'm starting chapter 9, building mechanical plan? Let me see. If you are gonna build your mechanical plan, right, you make sure that you have very simple rules, right? Don't try to build out the one that I have given you. The one that I've given you, it has a lot of rules. You want to pick the best rules that suit you and then go and test it out, right? The main thing is that you want to start testing as soon as humanly possible. Once you start testing, then you gather data whether your edge actually works or not. And then you can go from there and just refine it, make your entries better. You might even need to adjust the way you take profit and all that stuff, or even your stop loss if you keep on constantly getting stopped out. And then you are able to get better from there, right? But I'll say right now, take the first step, go through the lessons, create your mechanical trade plan. Once you do that, that will be day one of your professional trading career. Genuinely, when you start to have like a mechanical trade plan, it changes everything, bro. And yeah, that's just one of the many paradigm shifts that I uncovered throughout my trading career. That's one. Another one would be like transitioning from like retail concepts to like market mechanics. It felt like taking the red pill as well. Yeah, but yeah, those are some paradigm shifts that I encountered. Can I reach out if I need assistance? 100%, bro. You can either message me or you can just attend our coaching call on Friday. We will be more than on my coaching call, and we'll be more than happy to help you out.